Welcome back, folks, to Investor Diaries. In this video, we'll speak about a company that has been in the news for various reasons. Yes, we are speaking about Virgin Galactic today. Virgin Galactic trades on the New York Stock Exchange under the ticker symbol SPCE. And viewers, if you've not already done so, please smash the subscribe button right now to ensure that you receive the latest and greatest content from us.
While the majority of SPAC mergers were not really good quality investable companies, there are a few potential diamonds in the rough. Does that mean Virgin Galactic is another forgettable SPAC? Or does it have some growth potential over the next decade for the more patient investors? Should you, as an investor, buy, hold, or sell Virgin Galactic stocks? Let's find out in today's video.
All right, so Virgin Galactic is an American spaceflight company, which is founded by Richard Branson and his British Virgin Group that retains 11.9% stake through Virgin Investment Limited. It is headquartered in California and operates from New Mexico. The company has been developing commercial spacecraft and aims to provide suborbital space flights to space tourists.
Virgin Galactic went public via a merger with a special purpose acquisition company or SPAC from Chamath Palihapitiya in October 2019. In July 2021, Virgin Galactic became the first spaceflight company to independently launch a founder of the company into the space using the 50-mile high definition of space and having flown the founder, Richard Branson, over the 50-mile mark on the flight Unity 22.
Now, folks, we are all here to understand whether we should be buying or selling Virgin Galactic stock. So let's dive right into the stock performance. This stock has been extremely volatile, and it's also one of the speculative trades. Its share price has fallen to $7 a piece in the recent months after climbing as high as $62.8 a share in Feb of 2021.
That's right, Appy. The stock has plunged 72% over the past 12 months and 45% since the beginning of 2022. The stock hit a 52-week low of $7.05 on March 8th. In comparison, the S&P 500 has fallen 9% over the past 12 months and 13% since the beginning of January.
And let's call it for what it is. The stock performance has been dismal. And the issue is that there are no major catalysts ahead for this company. Well, you may argue that SPACs have been unfairly punished. There's a broad market sell-off, but we cannot ignore the fact that the issues surrounding the company, they've been hard to ignore.
Amidst all the recent news, Chamath Palihapitiya has been recently sued over insider sales of the Virgin Galactic shares. Chamath took advantage of his insider role as chairman of Virgin Galactic Holdings to sell 10 million shares of the struggling space travel company for approximately $315 million before he abruptly quit the board last month, a shareholder alleged in a lawsuit.
What's actually interesting is that even Richard Branson is getting sued. Branson is being accused of concealing defects in two prototype spaceships, also of selling off 346 million pounds of the company's stocks while the prices were artificially inflated. This is according to a civil lawsuit by Virgin Galactic shareholders. The lawsuit goes on to claim that the leaders of the company were well aware of the defects in its spacecraft 3 years before they were publicly disclosed last year, according to the complaint filed in the federal court in Brooklyn, New York.
So all in all, this is definitely not good news for the company. It does not need any further controversy. It needs great spacecrafts, needs them at regular intervals, and needs people to fly on those spacecrafts. And on that note, SPCE has also cranked up the price of the 90-minute flight on one of its space planes to $450,000 from about $250,000. The company started selling tickets to public on February 15th and hopes to sell 1,000 tickets in advance of its first commercial flight, which is scheduled for the Q4 of 2022. According to Morgan Stanley, SPCE has already sold at least 700 tickets.
So viewers, Investor Diary's viewpoint on this is pretty straightforward. These are the initial numbers of how many people have signed up to fly. And I'm not sure if we'll continue to get people to shell out $500,000 each and every single time. So we need to keep a close eye on them, but we are skeptic to them getting as many flyers as they are proclaiming.
All right, now let's look at the financial results of this company. When Virgin Galactic reported its year-end 2021 financial results, the news was, well, better than expected at least. Although, to be frank, the expectations weren't that high to begin with.
So after it spent more than 4 months not launching a single spaceflight, analysts had forecasted Virgin would end the year with losses of $1.54 per share on total revenue of about $3.3 million. Now, as it turned out, the losses were only $1.43 per share, though while the sales estimate was right on target.
The company lost a total of $354.8 million in all of 2021, bringing its cumulative losses over the last 2 years to nearly $1 billion US.
So folks, the real question here is, when will Virgin Galactic begin to make money? The company had originally hoped to begin the scheduled service in 2020 prior to Richard Branson's 70th birthday. But after a series of delays, it's now set a goal to begin service by the end of this year.
On the bright side, Virgin Galactic has a healthy cash cushion with $931 million in the bank. It also has a roster of potential customers willing to pay upward of $450,000 for a few moments in space. But if the last year has taught us anything, it is that space development rarely goes according to script.
Now, there's a very interesting analogy surrounding this company, which Eric Berger pointed out last week on Twitter. And he said, the more frequently Virgin Galactic flies, the more its expenses will grow. And if we were to combine all of this to a simple math, Virgin Galactic's expenses are $80 million a quarter. Now, at $450,000 a seat, that's 30 full flights a quarter, or one flight every 3 days, simply to break even. This doesn't seem possible in any way.
Additionally, Virgin Galactic has previously disclosed that its space planes use expendable hybrid solid fuel engines that must be replaced after every flight. Switching out old for new engines adds at least $250,000 to Virgin Galactic's operating costs per flight. So investors must expect that flying 30 full flights a quarter is going to add at least $7.5 million to Virgin Galactic's quarterly operating costs.
Wow. So Virgin Galactic now must fly at least 33 times per quarter to cover those extra costs and break even. And from our perspective, the way we look at it, we don't see Virgin Galactic breaking even. We don't see Virgin Galactic making money in the near to short term. So we are very bearish on this company.
So now, folks, is Virgin Galactic stock a buy, sell, or hold? We at Investor Diaries believe that you should not invest in Virgin Galactic and stay away from the stock. There are just too many uncertainties in this market and the company right now.
And if history has taught us one thing about spaceflight, it is very difficult to scale up flight rates. To go from 1 to 2 flights a year is hard. Going to 10 flights in a year is hard. But to go from 10 to 100 is even more difficult. So we'll be staying away from Virgin Galactic stocks.
That's right, folks. There is no guarantee that Virgin Galactic will have sufficient supply to meet future demand. And the price that the stock is trading right now is definitely not an entry point into Virgin Galactic. So our recommendation is to stay away from this stock. That's a wrap for today, folks. Hope you enjoy the content and let us know what your thoughts are on Virgin Galactic in the comments below. Until next time, stay tuned and stay focused.